Chapter 7 begins with um, credit card information and charge account information. So we're going to look at all of that. These calculations are are not really too complicated. It's really just adding and subtracting. The big thing is to understand what credit cards are, kind of how they work, charge accounts, what they are, how they work, stuff like that. So let's start off with credit cards. So a credit card is pretty much um, it's a way to spend money that doesn't necessarily come out of your bank account at the moment. So in other words, it's just like it sounds. It's a it's a credit that you get through companies that sell credit cards, have credit cards, things like that. Um, but that stuff has to be paid back. So pretty much people use it for like charges or cash advances or to make balance transfers. Um, so say for instance you're getting gas and it's $30 and you put it on your credit card. At the end of the month you'll get a credit card statement and you have to pay that statement off. So don't look at a lot of times people make the mistake of looking at credit cards as like free money or something like that. You always have to pay them back. It's just um, it's not coming directly out of your bank account. So it's different than like a checking account card, but you still have to pay it back. So either way, you're spending your money. It's just kind of how you want to do it. A charge account is like an existing credit at a business. So maybe you're going to a business and buying clothes or something like that, and um, they allow you to like charge credit, and you're not paying it off, but um, here's the kicker with both of those. There's something called a finance charge, which, if you do not pay off your credit card or whatever the charge account is for the company, then you're going to have um, an interest or a charge that is charged to you because you didn't pay off your credit card or your bills or um, your charge account on time. So when you get that account statement, um, you're going to need to be able to calculate all of that to figure out what your balance is, and that's what we're pretty much going to go over. So the big thing with credit cards is just you have to make sure if you're going to have a credit card, you have to be able to pay that stuff back on time, or else your credit score goes down. Um, you're charged even more money because you didn't pay it off on time. So that's the biggest thing with credit cards to understand. We're going to look at calculating like what your balance for that credit card would be, and usually it's like how much you've. Usually it's a good way to pretty much keep up with what you're spending and stuff like that, similar to how we've done in the past. So pretty much you're going to take the calculations for this are going to be to take your previous balance, add that with your finance charge, with your new purchases, and then subtract that by the payments and credits. And you'll receive it. The homework is pretty much just going to be a chart and calculating all these up, because the bigger concept is to understand what credit cards are, kind of just know that they have to be paid back. I guess that's the biggest thing that I can really say about them. So let's go through this example. We've got a previous balance of 600. So we're going to be taking 600, adding it by our finance charge, which is 750. And typically, if you don't pay your bills, I don't know the exact percentage, but usually it's more than 750. A lot of times people use, like credit card companies use that as a way to get more money out of you if you don't pay it back on time. That's why it's so important to pay it back on time. We're going to add our new purchases, and then we're going to subtract all of that by our payments and credits, which is $100. So these actual calculations are not too complicated. So we've got 600 plus 750 plus 90 plus, or actually minus 100. So our previous balance was 600. We added our finance charge, our new purchases, And now we're left with $597.50. So pretty much we're just calculating that new balance that's coming out. And this is different from like the checking account balance. The checking account balance is what you have. This credit card balance is what you're paying back. So like these payments and credits that we're subtracting, that's actually what you're paying. So if this were your credit card balance, you still have to pay back $597.50. So don't look at this as, this is almost looking at it at the opposite way that we looked at balance from checking account. When you have a balance in the credit card for these calculations, we're pretty much looking at how much you still have to pay, because we've added, before we were charged, we had already spent $600 from our credit card or a charge account, and then we had the finance charge added, our other purchases added. Then we made a payment of $100, and that's what we subtracted. So you're going to have to look at this a little bit different. And like I said, for the homework, it'll just be working through it. But the calculations aren't what's important here. The information is very important with this stuff, because you can just get into some tight spots. There's good and bads with credit cards, and there can just be a lot of bad if you don't know this information.